Okay, it's clear. So if you have a book, Oga, take some notes. If you have a book, you can take some short notes. If you don't have a book, I eat. But I'll send the video on the channel. More channel on send the link out there. So let's talk about the training plan. So let's talk about the trading plan. What is a trading plan? A trading plan, uh, a trading plan is like a reading timetable. A reading timetable goes quickly. A trading plan is like a reading timetable or send the meeting on your channel on this. Okay. So a trading plan is like a reading timetable or something that you write down in order to follow. Gore o trade sonzo ro kwale trading plan o ska re o trade hela. So most of us here are on a trading plan. We're just trading, re tsena mo market ra trader, re tsena mo market ra trader. So create a trading plan is an initial step for any trader who wants to be successful in the market. For any trader, yeah, for any trader who wants to be successful, it's a step for any trader that wants to be successful. Without a trading plan, you can't be successful without a trading plan because without trader, hello say to trade like an trader with udrai. So without the trading plan, you won't be successful. We are having steps that we are going to follow in order to design our trading plan or in order to make our trading plan. There are certain steps that we will be following. There are certain steps that we'll be following when designing our trading plan. When designing our trading plan. So trading plan, Rataborere, is there anyone who doesn't understand Setswana here? Is there anyone who Setswana? Is there anyone who doesn't understand our language, Setswana? Type.
Oh,
Uh, English only. Okay. I will try to. I will try to. Okay. So first step is to define your goals. First step is to define your goal. So your goal should be something that is measurable, something that is real, something that is achievable, something that is realistic and time bounded. So before you start trading, you have to define your goals. What do you want to achieve? How much money do you want to make? What is your risk tolerance? So before you trade, before you design a trading plan, Kana, the first step that you do when designing a trading plan is to set your goal. For example, your goal can be I want to build a house by the end of this year. That's a goal. My goal is to build a house by the end of this year. So that goal, when I look at it, house it costs a lot of money. So when I say I'm going to build a house in two weeks, that goal is not realistic, it's not measurable, and it's not time bounded because I will need a lot of money, but I cannot make a lot of money in 2 weeks. So I should state something that is time bounding or time bound. So when we set your goals here, uh, each and everyone here in the group should go and design a training plan. The first thing that that should come into your mind is what I want to achieve. Why am I trading? What do I want to achieve? Or I'm trading for fun, or I'm trading for what. So set a goal. For example, your goals can be I want to buy a car, I want to open a school, I want to open a driving school, I want to open something, then I'm going to invest in Forex. I'm going to invest in Forex. That's a trading, that's a goal that you have to set when you want to trade. That's a goal that then these points, how much money do you want to make? If I want to build a house, for example, I can say I want to make 2 million by year end, I want to make 2 million. That's a goal. What is your risk tolerance? Your risk tolerance? Risk tolerance, you are talking about the money you are willing to lose per trade. The money you are willing to lose per month. If I say I'm going to buy a house year end, end of year, I want to buy a house. I have to calculate already how much money am I willing to lose, how the risk ratio already. When I daily I want to make $1,000 daily, I want to lose $500 daily. That's a trade. That's a goal. That's your risk tolerance. The money you are willing to make compared to the money you are willing to lose. That's risk tolerance. Then the second step is to choose your market. Choose your market. Choose your market. So in this forex industry, we have different kinds of market, or we have different kind of commodities that you can trade. We have different types of market. Decide on the market you want to trade. Will it be stocks, forex, commodities, or options? Choose a market that you are familiar with and have a good understanding of. So somebody can make money trading boom and crash only. Somebody can make money trading gold and other volatile synthetics and other commodities like silver and other things. So choose your market. After you identify your goal, choose your market. I want to trade synthetics. I want to trade boom and crash. I want to trade gold. I want to trade what. That's how you are going to apply everything that you stated. How much money you want to make, what's your risk tolerance, your goals, should be specific, what. You know that when I trade gold, I can make this in this period, because when it moves, it moves. Unlike when I choose a synthetics market, when the market can react on my order block, then it will go back to entries, the reef. It will go back to entries. So choose a market that won't do that for you to achieve your goals, or for you to be successful. Then the third part is to develop a trading strategy. Develop a trading strategy. There are many strategies in Forex. Some use Falcon, some use trend lines, some use support and resistance, some use Falcon, some use indicator, some use SMC. So develop your strategy and use it in order to achieve your goals. In order to achieve each and every goal that you have stated above, choose a strategy and develop your strategy. Once you have chosen your market, you need to develop a trading strategy. Your strategy should include entry and exit rules, risk management guidelines, and a plan of how you will manage your trade. For example, if I take SMC, my strategy include entry and exit rules. When I choose SMC, you are trading order blocks. My entry technique will be I'm entering an order block. For example, I'm entering an order block that has the QML. Once my market or the price hits the QML, I enter. That's my strategy, to enter. Then I exit when my market breaks the higher high, the previous high, or breaks the previous low. That's how that's what they say about you. Your strategy should include entry and exit rules, risk management guidelines. Risk management here can say when my order block is violated, I'm going to exit the market with a loss. That's the risk tolerance or the risk management guidelines, and a plan for how will you manage your trade. If I have a strategy, I know how it works. If I use here, you can use any strategy. You are not forced to use SMC. You are not forced to use Falcon. You are not forced to use any strategy, but you can develop a strategy based on what you know about the strategy or what you want to achieve at the end of the day. That's a trading strategy. Then our fourth point is create a risk management plan. Create a risk management plan is our fourth point. Create a risk management plan. create a risk management plan. Risk management is an initial part of any trading plan. Determine how much are you willing to risk per trade, how will you set stop losses orders, and how will you manage your trades to minimize your losses. If I have a goal that I'm taking this 1000 USD to 1 million or to any amount that I want to achieve at the end of the day, I have to create a risk management plan. Somebody can say the money that when I find 50 USD, I want to achieve this at the end of 3 months, or I want to achieve this at the end of 5 months. Then my risk management plan will be, for example, I can say when I make $50, I withdraw, I transfer to my wallet. That's a risk management plan. When I make a certain USD or certain dollars, I transfer them to my wallet. That's a risk management plan. Here, determine how much are you willing to risk per trade. For example, when I say I want to make $100, then I have to determine what, in order to make $100, I can lose only 25 USD. That's risk management. That's risk management. The risk ratio or the reward is higher than the loss. My reward profit is higher than, should be higher than the loss. You cannot say you want to lose $100 to make 25 USD. That's being something else. So here, how will you set your stop losses? Here, the stop losses will be based on your strategy, the strategy that you have developed on the previous point is the one which determines where to place your stop losses. For example, if I trade order blocks, I'm going to place my stop losses below a bullish order block. Then I'm going to place my stop losses above a bearish order block. So that's how you set your stop losses. And how will you manage your trades to minimize losses? How will you manage your trade to minimize losses? Then the fifth point is set your trading rules. Trading rules, we are talking about create a set of trading rules that you will follow consistently. These rules should include things like when will you trade, how much you risk per trade, and how you willing to manage your trade. Here, the main point is the rules should include things like when you will trade. For example, if I trade stock indices or if I trade commodities, I know that gold is powerful and I should know the sessions, the London session breakout, the morning London session, the Kore. If I trade gold, I'm not supposed to trade in the night, or I'm not supposed to trade in other time except when I have the news or anything. Know your market. Which times does your commodity or anything that you trade moves? Because you cannot trade currency in the night. You cannot trade currency in the afternoon, not in the afternoon, in the evenings. This time I cannot trade currency this time because the market won't be moving like in the afternoons during sessions. The important point is to keep a trading journal. Each and everything that you do, when I find my account, I should record. This year I funded my account 3 times, but I never win or I never won. So what comes into your mind is that you need to improve your trading strategy because what you have been doing is not working. Now you have to improve your trading strategy because you have been recording 5 months losses, no withdrawal, no withdrawal, no profits. Then you have to keep a record of your trades. This will help you identify areas of improvement and track for progress over time. So if I record, then I make money 3 months. Then the 4th month I start to make loss. Then I can know my problem or what did I do? When did what did I did wrong, something that I did wrong, then I have to improve. This will help you identify areas of improvement. I have to improve to see whether it's fine, or revise and review and revise your plan. Once you did plan, or once you have finalized your training plan, revise it and make sure that you follow it each and every time. Because at school we're creating reading timetables, then we don't follow them, then we create another one, we don't follow it, we create another one. So here in the training plan, you have to be specific about your goal. Don't say I want a car, I want a house, I want correct. Be specific about the one thing that you want to achieve first. Then after achieving it, that's when you can move to another thing. Revise and review your plan. Your training plan is not set in stone. Review it regularly and revise it as necessary. This will help you adapt to changes in the market and improve your trading result. This one is strict. Remember, a trading plan is only remember that a trading plan is only as good as the trader who follows it. Stick to your plan, be disciplined, and don't let emotions cloud your judgment. With time and practice, you can develop a successful trading plan that suits your trading style and helps you achieve your goals. So here we are saying be disciplined and don't let emotions cloud your judgment. So emotions can damage your trading plan, because you can say without following a training plan. For example, if I say I want to make $50 per day, then I lose $50. Then I find again I want to make $50 because I want to bring back the lost $50. So when you do that, you're going to lose a lot of money. So don't let emotions judge your judgment. Don't let emotions cloud your judgment. That's the end of a training plan. You can ask questions, then I will attend them now. You can ask questions, then I will attend them now. I have recorded this, then I'm going to upload in the channel. You can ask questions. I'm waiting for your questions. Also, tlhaloganya teo ka mpotsa. Guys, you can ask questions. Tarabotse, guys. Tarabotse. If you send the photo, like you want to comment that, we are fine. It was clear and fine. Then I can end this Zoom meeting.
No, everything was clear. Thank you so much for enlightening us with the trading plan.
Yeah. You're welcome. So the comments, Barry, it was clear. The comments they are saying it was clear. Thank you so much. It's very clear, man. And so I'm going to open the group. Then we are going to discuss. Then we are going to comment. Please, I go to share the link. I go to share the communicate. Relevant the topic. Once I open the group, you send a link. I remove you. So that's the end of our lesson, guys. I will announce Mungrupu or next lesson or I'm going to teach the basic trading psychology, risk management, lead fundamental analysis, but we're not going to talk about the technical analysis. Technical analysis. Technical analysis is mentorship. You have to pay for it. Price that they reduce to 650 so that the cash up by January re hetsa nako e one. So if you're interested, you can hit up my inbox. 650, very, very, very affordable and cheap. So this is the end of our lesson, guys. Let's comment on the group.